The basic explanation of a range is candlesticks being created next to each other, right? And an easy way to notice this quicker is to look at the higher time frames. For example, if we look at our daily time frame right now, you can see how we have candlesticks next to each other. This creates a range, a really nice range on the lower time frame, because this is the daily time frame, so you have more information on the lower time frame, especially on the 1 hour time frame. All right, so a range should have a high and a low, and everything should be in between. Anything that's outside of our range should be seen as a wick. All the candlesticks, all the bodies of our candlesticks should be below the high. That's our high, and this is our low. So now this is our low. As you can see, we do not have any candlesticks closing above our high or our low. Now this is the basis of our range. If we had price closing outside of this range, then that invalidates the range. All right, so what you want to see is, you want to see price creating a high. This is our first high that was created, and this is the first low that was created. All right, so once you see that, you can anticipate a range if price comes back to the high and it fails to close above. As you can see, with the first rejection, second rejection, and third rejection, and all you can see is price rejecting that high. Price is failing to close that high. One thing that you can also notice on this area is how we have the same candlestick types. If you look at these candlesticks, these are very similar. All right, and you can see every time they are created, they are followed by a powerful bearish candlesticks. Now this was your signal that price is rejecting that high, and if price pushes all the way down to our low and respects it, you can see we had the first respect and then the second respect. Now this solidifies our idea of maybe price is creating a range. If price was not creating a range, then we could potentially have seen price pushing lower. However, the fact that it respected the previous low and pushed all the way back to our high shows us that price is creating a range. Now that's the basics of price creating a range. So you can use this explanation on the 15-minute time frame, the 30-minute time frame, if you want to catch price earlier, and if you are a day trader and you're looking to trade different sessions in a day, you can always use a range to get your a really good entry. All right, so one trick that you can use to see where price might be breaking out, you want to see how price is creating higher highs or higher lows. So for example, right now we have price created this low, created second low, and now price has created a higher high low. So as long as price is respecting this low, price has all the potential of pushing outside of our range. Now for this to be confirmed, we need price to give us one candlestick that will close above the range, and then this can confirm that price is ready to push higher. So that's when you can see price pushing above, closing above, coming back to retest before it pushes higher. Now the same thing can happen at the bottom as well. However, for it to happen, we would need price to create a new low. So we need price to close below this low. Once price closes below that low, then we know we have potential of pushing outside of the range. That's when we need the candlestick to close below, and then a retest, and then a push below. So it's the same idea, only the direction that price is pushing above or pushing lower is most likely where it's going to break out. We still have areas that we are also looking at to say, oh, that invalidates this setup, or that this setup is still valid. So you also have to keep all of those things in mind.